You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amerdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amerdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amerdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again for the Crypto Rundown here, the program on the old Options Insider Radio Network, where we go a little bit beyond our traditional stomping grounds, which are usually focused on the U.S. options markets. We're not going to talk about your SPYs and your VIXs and your Tesla options on this show. We're going to go a little bit further afield, talk about the Bitcoin, the ETH, the volume, the volatility, the skew, all that fun, and a whole bunch more. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting network upon which so many of you are binging these days. Remember, if you like what you hear, continue to throw stars our way on whatever platform you're listening on these days. The show's been running for a while. Kind of one of the few shows talking about crypto derivatives out there. Kind of nice to see the feedback we get from you out there. The network's been around for a while as well, but of course, this show, to me, is still the new edition, even though it's been around for probably 4+ years and now out there. So new reviews, new stars do keep helping new people continue to discover the show. Again, these markets exploding all the time, new people discovering them. They need a place to turn. And then, of course, if you need a place to turn for more content, maybe you're listening to this show, maybe you're coming more from the crypto world and you're still a little bit unfamiliar with some of these options concepts we're throwing around, then, of course, Options Bootcamp, Options Playbook Radio, the Option Block, Volatility Views, great shows for you to check out. So you should be subscribed to the full network. And, of course, if you want to go above and beyond, get some exclusive content, then theoptionsinsider.com/pro, the place to go to learn more as we learn who's joining us today as we roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everyone, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond. And next up is a newcomer to the program and indeed to the network. He is Luuk Strijers, the Chief Commercial Officer over there at Deribit. Luuk, welcome to the Crypto Rundown program.
Thank you very much, Mark, and thanks for pronouncing my name properly, which is kind of unique. So well done.
We take some effort here on the old network. We have a crack producing staff here. at the end of the day. But Luuk, I'm happy to get you folks on from Deribit. It seems like we've been analyzing your flow on this show for years now. So it's great to finally talk to you folks and get some insight into everything that's going on over there. Before we do that, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the crypto and indeed derivatives markets, as well as what it is you do day-to-day over there at Deribit.
Sure. My name is Luuk Strijers. I'm Dutch. I started out, I think, almost 20 years ago, 18, 19 years ago, in Amsterdam, capital markets, moved to the option space, I think 2008, 2009, for a company called The Order Machine, which was a new venture in the Netherlands focusing on competition in single stock options as well as index options owned by Nasdaq, ABN AMRO, Optiver, IMC, and those type of entities. And after that, I moved to Singapore, worked for about 5 years for SGX, the Singapore Exchange, was responsible for all issued products, which was stuff like ETFs, but also like warrants, CBDCs, leverage certificates, that kind of stuff. And then I joined Deribit in 2019, was in the Netherlands for Deribit for a year, and then moved to Panama for, I think, 2.5 years, and moving to Dubai now in a few weeks' time. So my role is Chief Commercial Officer, which implies that I look at clients, products, essentially the entire outside world that engages our platform one way or another.
Quite the international sampling. I've always was amazed in my time on the floor here in Chicago how the intersection of that Venn diagram is between the options world and the Dutch market. A lot of Dutch representation
Yes.
in the world of options out there. So you folks were ahead of the game way back in the day. Let's get to some of the fun stuff that's popping off over there right now at Deribit. You guys making a lot of headlines these days. We'll start with probably the big one. Then I want to drill down into some more specifics about what's going on over there on your platform at the end of the day. A lot of people really excited, interested in your announcement recently that you're getting into the spot side. Obviously, we love options here. We're going to get into all that fun in a little bit in volatility. But spot is what brings a lot of people to the dance at the end of the day. And one of the frequent complaints we've had from a lot of our listeners over the years, Luuk, who are usually very savvy options traders, and they're used to kind of the deep liquid markets they get here in the U.S., whether it's for underlying or whether it's for the options or indeed for the futures, is that crypto is too expensive. The transaction fees are enormous, especially when you compare them to a lot of the liquid products they're used to trading here. Sounds like you folks heard that complaint because you're diving into the spot side and going free. Why are you guys deciding to launch that now here, Luuk?
I think for us, there's a difference between, let's say, two types of spot. One is fiat on-ramps, which is always expensive. When you convert dollars, euros, or whatever you have into crypto, it's heavily regulated, and these firms that engage in that kind of stuff simply have to charge slightly extra for all the hassle. And what we do is simply converting BTC or ETH into USDC, which is also what we call spot, but it's a simpler version than fiat on-ramping. And because of its simplicity and because we see it as an additional service, we decided to do it for free. So we have a limited product range, and in order to optimize trading, we simply want to encourage everyone to be able to convert whatever size they like, whenever they please, at zero fees, which is important when sometimes the focus is on ETH, sometimes the focus is on linears, sometimes the focus is on BTC, and we want to enable everyone without friction to do that. And before we had spot, we had a smaller solution, which we called the swapper, which was smaller size conversion, or people would have to go elsewhere, which is, of course, a pity. So we essentially see this as complementing the platform and making our offering complete.
Obviously, you have a lot of professionals and market makers floating around on your platform as well. They need to hedge with a lot of the underlying. So was a lot of this driven by feedback from them? You wanted to just facilitate some of their hedges, make it a little bit easier for them as well, Luuk?
Exactly. So what we launched is the base pairs, BTC, USDC, ETH, USDC, BTC, ETH. And we didn't launch, let's say, the alternative available spot pairs like everything you can imagine. So this is like step one. Step 2 might be adding all the other pairs. So this is simply to complement or to finalize our offering, enabling our market makers, our essentially our full client base, to convert whenever they please. And also, secondly, it's always difficult to onboard new clients. So marketing for a niche product is difficult. So we also use it, of course, as some way of opening the door to new clients.
Well, the other common complaint we hear from a lot of our savvy listeners who are dipping their toes into crypto derivatives is, man, the spreads are killer. The spreads are just too wide. Sounds like you heard this one as well, Luuk, over there at Deribit, because the other big change you're making very recently, just last month, I believe, is that you went across the board and reduced your tick sizes in your order book. So catch our listeners up who aren't familiar. What changes did you make, and how did you go about tightening things up?
Yeah, so we reduced the tick size for smaller, lower priced options. So tick size is a very sensitive topic because it's for the buy side traders, it's essentially the spread. So they have to cross the spread to position themselves, and for the makers, it's essentially their earnings. So they want it as big as possible, and the other side wants it as small as possible. And whatever you do, it's always sensitive. So you have to do it in a, I think, gradual way. You can't do it across the board in one go. But I think in the long run, we will strive to reduce tick sizes further to enable traders to trade as efficient as possible.
Market makers are always going to complain, Luuk. As a former market maker myself, we're a grim lot. I was very upset when they went from 16ths and 8ths to pennies. So, we're always going to complain about progress at the end of the day. But, of course.
But in the end, it should balance itself out, right? So we strive to grow the market, and stuff like this should also grow volume. So, sure, market makers will complain. The volume will increase, hopefully, and the spread might decrease a bit. But in the end, it's for the good of the entire ecosystem.
Exactly. If you bring more volume to the dance for them, I think they'll be happy at the end of the day.
Yeah.
Let's dive a little bit deeper into some of the cool things you have cooking over there on your platform. We obviously like talking about volatility on our network. We, of course, have a whole program designed around all of that. But, of course, we have dabbled in the past in a lot of products that have attempted to replicate what's going on in the volatility space here in the U.S. equity markets. In the crypto space, with varying degrees of success, we've seen a number of different approaches at that over the years from a variety of different venues out there. You guys over there at Deribit are now jumping into the fray as well. You recently launched DVOL, which is the Bitcoin volatility product. Very interesting. I like the fact that you came out right away and said, you know what, this isn't a fear gauge, this is an action gauge, which I thought was actually an appropriate comment because we've seen a lot of people conflate VIX and Bitcoin vol because they're used to underlying goes down, VIX goes up. And in the Bitcoin space, not exactly that kind of way at all. The skew could be all over the place. So very intriguing, but I'm getting ahead of myself. You can tell I'm excited about this here. Luuk, let's start with the basics. What the heck is DVOL? What are you guys offering here? And for a lot of our listeners, they like to get into the weeds a little bit. How did you construct this thing? What is it a measure of?
It's essentially comparable to VIX, but then in the crypto space. So we've launched it perhaps a year ago already, but initially as an index only. So we wanted to enable clients to immediately see in a single number what the state of the market is. Instead of, so we have a long options chain, we have a lot of complex stuff, but in order to convert all that complexity in a single number, we wanted that number to be available on all screens, in all media, in all our partners. Everyone should be able to use it for free. We don't charge for market data and for any of that stuff, because we want to roll out a successful, what we call an action gauge. It's an indicator using our implied vols in the option space, essentially the same as VIX is calculated, and then converted into a single number. And when we launched it, the number was decent, was actually really high compared to the equity space. It was over 100, 120, 150 occasionally. But now we're looking at rock bottom levels. It's 40, which is still relatively high versus the equity space, but for crypto it's very low. So everyone is complaining a bit about the lack of volatility. So I think earlier this year, Jan, Feb, something like that, we launched DVOL futures. which is tradable volatility. So it's essentially the same product, but then futures on that product. We only launched BTC, so at some point we will launch ETH as well. But we're waiting for the right opportunity because volatility is simply too low to justify launching that product now. But I think it's pure volatility. It's a perfect way to position yourself cheaply if you're a volatility trader. So it's not suitable for all. It's complex stuff. It moves fast. It's not the same as just regular options positions, but for like the specialists, it's an amazing product. People that love volatility and love to position themselves, they would love DVOL as well. And especially if the market recovers or volatility increases a bit, it's the perfect product to trade.
So just to clarify for our listeners then, it's similar to VIX in the fact that it's effectively a rolling 30-day measure of volatility out there. Now, VIX, as you know, gets a little controversial for some people. Some people think they should just look at the straight at the money vol, just look at a straddle. That's the way it used to be done on the floor, with straddle runs. VIX gets a little bit into the weeds by incorporating skew. Some people love that. Some people hate that. It's been controversial. It's been a subject of lawsuits. Are you utilizing a similar methodology? Are you incorporating some of the options chain away from the at the money as well, or is it more just a straight at the money straddle?
Yes, we have a similar process VIX, and beyond that, we even have a little bit more gaming protection to make sure that liquidity is not the same as in the traditional space. So we have some small measures there. We publish everything, so nothing is hidden. The full white paper is available on our website, and everyone is able to review it and even share comments. We opened it up before we launched it for community feedback. We send it to all the big takers, as in the people who are potentially trading this stuff, and as well as the makers. So it's more like a joint project where we all think, and no one has criticized the product. It's simply the lack of volatility that reduces trading slightly at the moment.
Yes, volatility, as we mention every week on this show and a lot of other shows on the network, very anemic, especially in the crypto space these days. That's interesting. So you have put some safeguards in place to prevent what we're seeing going on in the VIX land, going on in the DVOL product, which is interesting. And you mentioned it's kind of new, the futures only right now. How is the volume in the early days?
It's when we launched, the volatility was higher, and now it's limited. It's a few $100,000 a week, so it's very limited. But it's also not really being promoted at the moment. So it's more like a dormant product, which a few market makers are keen to quote, and a few traders trade every now and then. But it's not a big volume contributor at the moment. So if you look at our market, we trade, let's say, 50 billion a month, approximately notional. 2/3 of that is options, so pure options. Let's say 15% is futures, so that's the options hedge, and then around 20% would be the perpetual, and beyond that, so stuff like DVOL, our linear perpetuals, as well as spot, is still limited. So the 50 billion is for, let's say, 49 billion is the perpetual, is futures, and predominantly options. So that's our core market.
Well, you don't promote it, but we're talking about it here, Luuk, so hopefully we'll see a little bit of crossover interest. We have a lot of hardcore vol traders on the network who are always asking us about crypto vol products over there. Might have a little bit of education to go along with this product as well, because unlike VIX, which usually correlates inversely to the markets, as you mentioned in your literature on this product, Bitcoin vol can go anywhere depending on the skew, right? So it's a very different product. The use case is very different. So I'd be curious to see who is using this, what kind of use case they have for it, because it is, at the end of the day, a very different beast than equity volatility. So fascinating stuff, listeners, on the Bitcoin vol front. You mentioned some of the products you're listing over there. Of course, we have the big Bitcoin halving coming up next year. It sounds like you guys are getting an early jump on that, launching some of the June options expirations now, Luuk.
Yeah, we launched them earlier, slightly earlier versus what we typically do because of market demand. So people liked positioning themselves for the halving already. We see quite a lot of interest. Overall, I think even more since the XRP news recently, it's quite, the market is not really moving a lot, but the upside positioning is growing. So we see out of the money calls being bought, we see call spreads. It's not that much protective or bearish behavior, but it's more the opposite. So I think the market, whether it's the halving or just overall a positive stance because of potential regulatory positive news, but our client base indeed is positioning themselves in a more positive way versus some months ago.
Well, as you mentioned, a few months ago, you guys hit a new record open interest of about 20 billion. That was back in March. As we discussed, since then, vol has come off a little bit. So vol dropping, not usually a big driver for options volume. So what are you seeing now a few months later after that record? Is OI still strong, or has it come off a little bit along with the declining volatility, Luuk?
No, it has declined. So market moved up. We had like the bank problem in the US. So BTC was seen as a possible hedge. So we saw vol exploding briefly. We saw a lot of positioning for potential upside. And then I think the market and the banking system recovered a bit. April and May was quiet. June was a nice month, but it's also because of the quarterly expiry. So we had decent activity, but a lot of it expired. So if you look at overall open interest, which is normal after big expiries, we see it around 13, 14 billion at the moment versus indeed the 20 billion peak we saw in March. This is typically it takes a few weeks for the market to recover. So we're seeing that already. But what we saw in March was I think it lasted like 2 weeks, so not that long. But hope to see something similar again soon. So what trends do we see? I think depending on the news in the US, it has either a positive or negative effect on the options market. So when there's a lot of regulatory issues and in court cases, etc., we see bearish activity, people hedging for the downside. And when there's stuff like XRP, for example, we see some bullish momentum returning. Overall, I think it's not bad. It's the market is reasonably positive at the moment.
Well, you mentioned the big news on the regulatory front. Let's get into that now. Of course, a lot going on since our last episode, listeners. How long have we talked about on this show, listeners? Since its inception, it seems like XRP has been mired in that lawsuit. No resolution in either direction, so XRP just kind of vacillated. Is it a security? Is it not? A lot of back and forth. We finally had some resolution on that front last week. It was, as Luuk mentioned, very bullish for a lot of the crypto assets you probably have in your portfolio right now, including XRP. Much anticipated pop out there. Then, of course, coming in right at the start of the show, we have Gary Gensler coming in and throwing some cold water on that, which you could probably expect he was going to do. He's come out many times as not a fan of a lot of these products, and sounds like including XRP, and kind of throwing a bit of a warning out there to the XRP hodlers out there. So that seems to be weighing on markets right now. But let's start there, Luuk. As an exchange venue yourselves, what were your thoughts on the big action we saw here on the regulatory front here in the U.S. over the past week? Of course, the final somewhat resolution of this ongoing saga with XRP, and then now our regulators coming in and throwing a little bit of cold water on that front, sir.
Yeah, so I think it's just another episode. So that's the it has been taking a few years already, and it's most likely going to take quite a while. So I think it's temporary optimism until the next episode starts. So for us, we have XRP linear perpetuals, but what we intend to do soon in the summer or just after the summer is launch linear options, which is, I think, our missing product on the shelf. So that's simple stuff like, for example, XRP options or whatever the underlying could be. We want to try this out to see the market appetite, the market response. We want to launch them with a few weeklies, monthlies, and one quarterly, most likely. So exposure up until 3 months, and see what the feedback is going to be. I think it would complete our offering. So I mentioned before, we want to have spot, and this is like the missing component. So we want to have a few linear options as well, see what the feedback is, and then potentially expand. So we could do more, we could do longer expiries. And then the next step would be cross-collateral. So that's coming most likely September, October, which is taking all the assets and merging them in one big pool instead of segregated silos. And that's it seems very simple and like a key requirement, but it's proven to be rather complex. So we have been working on that for quite some time, and that's going live before year end. So we're quite excited about that combination, linear plus cross-collateral.
Interesting. So XRP holders out there, they'll have some more options, pun intended, in the near future. Well, Luuk, we've been analyzing the flow on your platform on this program here for years. And the number one question we get at the end of the show, usually from a lot of our listeners, is we love all this stuff you're talking about here, but as a U.S. resident, U.S. customer, I just can't trade it. Obviously, as we just discussed, the U.S. regulatory scene still highly fluid, to put it charitably. So it's hard to give any real insight. I'm sure you get asked this question all the time. What are your thoughts on when you can expect, or maybe what you're anticipating at Deribit, you can really start incorporating U.S. users down the road, sir?
Very difficult to predict, unfortunately. So we're getting a license in Dubai. I'm moving to Dubai myself later this summer. That's step one. So we will be a fully licensed platform from there. The next step would be MiFID license, enabling us to service Europe in full. And then the next step would be other countries. But still, the lack of regulatory clarity in the US, especially when it comes to cross-border platforms like us, will most likely not push us to enter the US anytime soon, unfortunately. So the only way you would be able to trade would be leaving the US, which is a lot of people are doing. So if you really want to trade our platform, you're more than welcome in Dubai or wherever you intend to go. But sadly, we can still not enable or onboard US clients.
Yeah, Luuk might need a roommate in Dubai, so hit him up, listeners. Maybe you can share a space and sling some Deribit. We have seen many attempts here in the U.S. to try to replicate what you folks are doing over there at Deribit with varying degrees of success. Some of the largest in terms of volume, what volume there is on the regulated listed front is, of course, what CME has offered with the Bitcoin and the Ether futures and options, and, of course, micro futures and options as well. We saw somewhat infamously what Ledger X did, which became FTX US derivatives, and we all know how that saga went. Seems like MyX has bought them now, so maybe they have a new lease on life. But for whatever reason, a lot of the listed options here in the US, Luuk, never really seemed to gain a lot of steam. What are your thoughts on the listed products we've seen here in the US that are attempting to offer some sort of crypto future or option for the US audience, and why maybe the majority of them have yet to really catch fire?
We've seen competition from within the US and outside of the US. So there's plenty offshore platforms that try to offer something similar as well. We still have 85-90% market share. I think there's a few reasons. One is options is our core product. As I mentioned before, like 2/3 of our volumes are options, and we will do whatever we can to protect that. So that means offering the best products, the best margining solution, the fastest engine. We have dedicated hardware, so we're not cloud-based. You can cross-connect, you can colo, all that stuff is available. We have multicast, which is unique in the crypto space. So we have a bunch of these institutional offerings that no one else has, and we keep building more of those. So 80-90% of our volumes are institutional, so we service all the big names in the world, and we intend to keep that position. And for many others, it's a side product. So for them, options would be literally optional. It's nice if it works, but it's not terrible if it fails. And for us, it's essentially our survival. So we're all into options, and that means that we will always be most likely faster and better than the competition, or at least that's what we hope to be. And I think a common mistake in the comparison would be the success of the traditional options market in the US. If you look at options are traded more than spot, and people think that the crypto space will be the same in a few years' time. I think what you're forgetting is that the perpetual exists in the crypto space, which is efficient and very simple leverage for the masses, essentially. So a lot of people that in the US trade options because of the absence of a perpetual product. So in the crypto space, the perpetual exists, and that's why a lot of our competitors struggle to activate clients simply because their existing client base trades another product, and it's difficult to convince them of the other features of options. So stuff like volatility, strategies, it's rather complex, and you need to educate yourself properly, and that takes time. So the overall available market is simply not the same for, if you look at platforms like Binance, they have hundreds of millions of clients, and we have thousands of clients. It's not the same audience. So I think it's a niche market, and therefore more difficult to reach, more difficult to educate, and it's a longer roadmap.
Well, Luuk, this has been a fascinating conversation. I appreciate you joining us at late evening for you folks over there. So I appreciate you taking some time out of your evening to join us here on the show. Like I said, we've been talking about your flow on this show for years. In fact, once I hang up with you, I'm going to go analyze a bunch of flow on your platform for the rest of this show. So we're very well versed in Deribit flow here. Nice to finally get a little bit of insight from you folks onto what's going on over there. But before we go, we like to leave our audience wanting more, Luuk. So we hit on a lot of the new initiatives you have unrolling over there at Deribit in the coming weeks and months. But that said, if there's anything we forgot to touch on, or maybe you want to leave our audience with a little bit of a hint, a little bit of a tease of what they can expect coming from Deribit in the coming weeks and months, now is the time, sir. The floor is yours.
For us, as mentioned, it's difficult to activate new clients. So what we're trying to do is make our UI simpler. So we have an amazing UI, but for a lot of people, it's overwhelming with too many Greeks, the full option exchange. So we try to make it more simple, or at least optional. You can choose the complex one or the simple one. So we've launched stuff like a vol service. We're launching an options wizard, so a simple version. We're launching new UI components in line with the simplicity, so like to offset the complexity. But I personally believe in linear as well as cross-collateral the most. So cross-collateral will bring a lot of capital efficiency. So you no longer have to segregate BTC, ETH, etc., but it will be one big pool. Which will be, I think, quite amazing, especially for the larger institutional clients. So it really will relieve their capital constraints and the linear options. So the linears will allow us to be more involved with what's happening in the market. So stuff like the XRP news. I think it would be amazing should we've had daily options on the XRP. The returns we would have seen those days would be crazy. So I think having that kind of stuff beyond just the regular BTC and ETH products would really make our product shelf very interesting. So those are my personal favorites.
Very interesting stuff. Listeners, you know where to go to check out more. Just search for Deribit at Deribit Exchange on Twitter as well. DERIBIT, of course, Exchange, all one word there on Twitter. And Luuk, we appreciate you joining us here today, and we'll look forward to seeing. We talked about a lot of stuff, how all of this unfolds over there in the marketplace in the coming months, Luuk.
You're welcome. Thanks for having me, and look forward to talking to you again at some point.
Yes, now I have to go talk about the rest of the flow on your platform, Luuk. So if you'll excuse me, we'll keep on rolling right on into the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
Well, listeners, that was a fascinating segment. Hope you enjoyed it, talking to the folks behind all the flow we're talking about here on the show week in and week out, and have been doing so, of course, for years. Some fascinating stuff there. Of course, zero fee spot. I know that'll resonate to a lot of you. Tighter spreads for those of you out there in Dubai and other markets who can actually trade those options. DVOL, very fascinating. We've seen a lot of different tilts at that crypto volatility windmill. Will DVOL be the one that stands above the rest? I suppose we shall find out. Again, the use case for volatility in the crypto market, very different than in equities. People use it as often a surrogate hedge for some downside. You buy some volatility. If the S&P sells off aggressively, that vol tends to pop. In the crypto space, not entirely the same thing. We have very different skew, and that skew moves around all the time. Of course, you've been listening to this show for a long time. You know exactly what I'm talking about here. And if you want to see all that data for yourselves, you know where to go. Amerdata.io, the place to go to kick the tires and light the fires out there. If you did that, you'd see a lot of this data we're going to talk about right now, and quite frankly, a whole bunch more we literally do not have time to get to on the show. I'm amazed whenever I fire up that platform how much more they've added, and we need to have a 5-hour show just to get into all that stuff, listeners. But intriguing stuff, as we mentioned with our guest, a little bit of drama on the crypto regulatory front since the last time we all gathered here together. That all netted out into a little bit of a wild ride over the course of the past week, even though we are settling out right now almost exactly where we were a week ago, a few hundred points below it. So intriguing stuff. As we kicked off the show, Bitcoin was hovering exactly at 30,000 pretty much, give or take a few handles, about 30,008 to be precise out there. So after rallying as high as 31,814, and of course, on the end of our show last week, it was 30,420. So we had seen a nice little rally. Then that high came last Thursday, of course, on the heels of all that XRP love going on out there in the market. And then we saw it actually dip below 30,000, just very briefly, though, 29,966. And then, of course, we were trying to rally today until Gensler came out and said, hold on, all this enthusiasm about XRP, let's just pump the brakes there. That's the regulator's going to do that, you know that at the end of the day, listeners. So that's why we're vacillating back around the 30K strike right now. And since we've kind of come back to where we were this time last week, as we mentioned with our guest there from Deribit, vol continues to erode. It was a 41 on the show last week, 39 this week. So unfortunately, for those of you who thought maybe this XRP action would be the shot in the arm that vol needed, not the case. If you go farther out the curve, listeners, go all the way out about 6 months, you'll see vol coming in a little bit there as well, about exactly 2 points. It was 50.35 on our show last week, 48.35 today, so coming in there as well. Let's get out to the skew and see what's kicking in. Again, that's what makes the DVOL product so intriguing. The skew is all over the place in crypto, so what you're looking at, what you're going to get with that DVOL product is going to change week in, week out, which is always fascinating out there. Well, let's start near dated on the skew front and work our way out. Let's go out into the weekly front. Of course, you saw a lot popping off over the span of the last week. So that weekly skew is kind of interesting. And right now it's looking kind of positive, about positive 2.25. On our show last week, it was positive 1.5. So ticking up, not quite a full point, but looking a little bit more optimistic to the upside. In terms of going a little bit farther out, your traditional 1 month 25 delta put, 25 delta call skew, that's looking pretty similar to what it was this time a week ago. It was about a 1.25 to the upside last week and about 1.33 to the upside this week. So not a heck of a lot of evolution there. If we go a little bit farther out, 6 months, again, 6 months skew, you're not going to see a ton of evolution that far out. And that's pretty much the case this week. It was a 4.20 on the show last week, a 4 even this week. So not a heck of a lot of evolution there. We are starting to see a little bit of the OI start to slowly claw its way back since the expiration cycle for June, which took just a lot of stuff off the top. Right now, we have about 191,000 contracts open over there on Deribit, up about 9,000 on the week. The puts, 83,000, up about 2,000 on the week. If we're looking at the top open interest movers and shakers out there, what are the big positions that have really piled in or maybe closed things out since our last show? And we have a tie for the number 4 and 5 spot. The 35,000 calls and the 34,000 calls have both gained about 1,500 contracts since our last show. Number 3, we have the 31,000 calls that gained about 2,100 contracts. Number 2, 33,000 calls, they've gained about 2,600 contracts. And the biggest OI change since our last show, the 32,000 calls gained about 3,900 contracts. Again, we flirted with that strike. We got up to 31,814. So you could see why maybe the 32K strike would move into the catbird seat out there. Again, didn't see any puts in the top 5 again this week, so that is somewhat interesting out there. In terms of the product a lot of you like to use, which is BitO, looks like eroding a little bit again today. It's about a 16 even right now. That puts it down about a little over 1/3 of a point from where it was this time last week. In terms of volume, the ADV moving in the right direction, back up to about 50,000 contracts. It's up about 7,000 from what it was this time last week. So all that XRP drama driving a little bit of action out there. So that's good to see. In terms of action today, about 29,000 contracts on the tape. So it seems like it's on pace to, well, we don't have that much time left, so maybe not going to hit it today, but a decent day nonetheless. In terms of vol, it's literally on what it was this time last week. We were 46 this time last week. 46 again this week, so no big evolution there. Let's get out to the top position. Let's just do a top 5 out here, listeners, because we we went pretty deep on Deribit this week, but again, fascinating stuff. Hope you enjoyed that. Number 5, we have the Jan 2024, so the upcoming January, 15 calls. Number 4, we have, that was 27,000 of those, by the way. Number 4, we have 38,000 of the Jan 2025, 25 calls, my favorites. Number 3, 58,000 of the Jan 24, it's all Jan listeners, 65 calls. Number 2, 61,000 of the Jan 25, 35 calls. And the big dog position out there in BitO options right now, 80,000 of the Jan 2025, 30 calls. Let's keep on rolling now, listeners, and explore some of the action outside of Bitcoin. It is time for the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody. Welcome to the altcoin universe, the portion of the show where we break down everything going on outside of the big dog, which is Bitcoin, except for right now, when we break down the top 10 from a market cap perspective. You know that news last week's going to cause some shakeup out here. I can already see one that's kind of interesting, maybe going to please or infuriate some of you out there. But number 10, we got Polygon holding down the number 10 spot again. Cost you about $7.1 billion to break into the top 10 this week, listeners. So a little bit higher than it has been in the recent past. Number 9, though, the big move. How long have we been talking about Doge? Just glued, just locked to the 8 spot, listeners. It seems like nothing could budge it, or it seemed like at least, past tense, because Doge is now number 9 with $9.6 billion. What could possibly usurp the mighty Doge? Well, it is Solana, another crypto underlying that is beset with controversy, coming in with about $10.5 billion. Solana on a nice run, 26 and change. When we kicked off the show, that was down at 14 not too long ago. So that's a nice pop, nearly doubling. So interesting stuff there. Number 7, Cardano, $10.8 billion worth of market cap. Number 6, USD Coin, $27 billion exactly. Number 5, BNB, $37.7 billion. Number 4, XRP, $38.2 billion. Number 3, it's Tether, $83.6 billion. Number 2, it's ETH, $227, almost $228 billion. And the big dog, Bitcoin, $583 billion worth of market cap, listeners. So a lot of evolution out there on the show this week, and a lot of evolution on the market cap front, which again, that is to be expected. I'm sure a lot of you want to know where XRP was in our market cap this time last week, and it came in at number 6 with about $24.7 billion worth of market cap. Nice jump there from 6 to 4. And again, gaining about $12 billion worth of market cap. So again, a lot of that is just pent up. People have been waiting for how many years to see this, listeners? So for all you XRP holders, some of the news I think you've been waiting for a while. Maybe not all of it. And of course, today's news from Gensler, maybe not exactly what you want to hear, but intriguing stuff nonetheless. When we kicked off the show, we had ETH threatening the 1900 level, 1894. On our show last week, it was 1874. So we're up about exactly 20 handles on the week. In between, obviously did a little bit more living, a dip down to 1848. That actually came right after our show last week on Monday, and the high came on Friday, a little bit north of 2026. So intriguing stuff. Again, XRP optimism running wild out there, listeners, maybe starting to settle back in a little bit as well, which is why the vol is settling back in as well. On our show last week, it was about 40 and a quarter. This week, 40 even. So not a heck of a lot of evolution there. Going a little bit farther out, let's go out 6 months, and same thing, 48.7 last week, 47.7 this week, so coming in a point. Skew-wise, we saw the weekly skew heavily bullish last week, about -2. This week, kind of flat, about -0.5, so a little bit of evolution there. Going a little bit farther out, full month worth of skew. It was a -1 last week, -0.5 this week, so everything was slightly bearish last week, and then it seems like a lot of that is coming in this week. And then going a little bit farther out, 6 months, the skew there was positive 3.5 last show. This week, that has come in as well, positive 1.35. What is gaining, though, is the OI on Ether over there on Deribit. We've said many times, Ether options, for whatever reason, they love a quarterly. They can't get enough of it. And so when the quarterly expirations come around, they take a lot off the top, listeners, from an OI perspective. Takes a while to build that back up. We're seeing that happen slowly out here in ETH. 1.98 million contracts open on the call side on Deribit right now. It's up about 220,000 contracts. The puts, 613,000 contracts. That's up about 51,000 from this time last week. So not quite 4-1, about 3.5-1 calls over puts out there, which again is kind of in that range we've come to expect from an overall ETH action perspective. Speaking of action, let's hit on some of the other top underlying movers and shakers, and we'll get out of here for this week, listeners. Solana, as I mentioned, having a nice run over the last couple of weeks, up about exactly $5 from our show last week. It was 21.13 on the show last week, 26.14. This week's up 5.01 to be precise, and again, it was at 14 not too long ago, just a few weeks ago. So an impressive rally for Solana after suffering a lot of slings and arrows out there post FTX. To see this resurgence has been interesting. XRP, you don't need me to tell you, popping hard. 47 cents on our show last week, 72 cents this week, up 25 cents. Is that the explosion of upside you expected? A lot of people were hoping maybe it would revisit some of the highs of a while ago. Didn't quite get there, but again, there's still a lot hanging over XRP, but intriguing stuff nonetheless. Doge getting lifted a little bit as well, 6.4 cents last week, 6.8 cents this week, but not enough to hold on to the number 8 spot. Solana stealing that thunder. Litecoin actually taking a break, 95.25 on our show last week, 90.70 this week, so off around $4.50. Interesting. So Litecoin taking on the chin. Let's go out to a few more really quickly. Cardano, 28.8 cents last week, 30.8 cents. This week's up about 2 cents. Polkadot, 5.13 last week, 5.23 this week, so up about a dime there. And then everyone's favorite, Shiba Inu, 0.0000075 last week. This week it is 0.0000077. So not quite there with the Shiba Lambos, listeners. All right, that is going to do it for the Crypto Rundown today, listeners. I want to thank our guest for joining us today. Luuk Strijers, the Chief Commercial Officer over there at Deribit. A lot of fascinating stuff cooking, and, we've analyzed their flow for a long time. I know for a lot of you, it's still a difficult platform to trade on, but the flow is there, the volume is there, the volatility is there, so that's where we have to be from an analysis perspective. I hope you appreciated hearing from them on what's cooking over there and a lot of the new products and offerings they have on their platform. That's going to do it for us today, live on the network. Back again tomorrow, listeners, with all of our usual array of content. For those of you out there on the pro side, another great pro Q&A coming at you tomorrow with the folks over there at Interactive Brokers. And then on Wednesday, of course, your usual live dose of Options Bootcamp. By the way, if you want to participate in that pro Q&A, got to be part of the pro, theoptionsinsider.com/pro, the place to go to learn more. Thursday, of course, the option block and This Week in Futures Options, where on that latter program, we do touch on a lot of the regulated side of the crypto space here in the U.S., so the CME offerings in particular. So check out that show if you want a little bit more crypto in your lives. And, of course, Friday, we talked a lot about vol today, volatility views. And then after that, for you pro folks, we come back for Options Oddities. Then we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amerdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amerdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amerdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.